Hey team, welcome back to the channel. I want to go over how to avoid false breaks when trading the confirmation strategy. So when we're trading this strategy, we're looking for a clean close over a predetermined resistance level, right? And we look for that level to then hold as support. And if it can't hold as support, we look as a close below as time to possibly bail out of the trade as it's bearish from there until it gets back above the level. And the theory behind this strategy is this, and it's really simple. If we think that, for this one, for instance, PTPI, if we think that $8.20 is the level it needs to close over and hold, and we look at the next level of resistance at $9.20 with half and whole dollar in between, then what we're looking for is once it closes over $8.20 to then hold that level, hit that target to scale out of our position. Now, confirmation is great because what it is it's built around risk management. So although it does have areas to scale out in the profit, it doesn't mean we have to hold into those levels. So some traders are okay with a 5 cent, 10 cent, even 20 cent pop, which this move was a dollar move. So, when you're looking for a 10-cent pop that's consistent, you're looking for a confirmation of a particular level, then these are the type of moves that we're looking for. A clean close over a resistance level to then hold that level, right? 820 was the level, to then hit the target. So we can see on PTPI, we had this nasty candle here. And that is going to let us know that there's a possible red flag before getting into this trade further down the road, right? It's letting us know that there is a chance of these major red candles because we've already seen one in the past. So this candle right here, if we hover over at the top on TradingView, you can see it was a negative 7.48%. So it's 7.5% negative candle. So I deem that as a major red candle and a major red flag before getting into my trades. So when I saw this move over here and we have this move right here, and this was a halt, it halted here. I was unable to capture that move, and that's because it was just too fast for me. So I'm going to let that go without me. And the reason for it is I know that I don't want to buy a false breakout. And that's what these little wicks are over here. These are false breakouts. I don't want to buy those, right? I want to see a clean close over this predetermined level 820. So we got that clean close over, but it was a halt and it made a huge move. And if we see here, if we measure this move, from the bottom of this candle to the top of this, we can see it's 15%. So that is telling me that there's a bullish vertical trend. We don't have the indicator plotting it there, but that is a bullish vertical trend and lets me know that, hey, are you sure you want to take this trade? And if so, assess this condition plus this condition and maybe adjust my size in my approach going into this trade and where to put that stop loss, right? Or really sometimes I just avoid the trade altogether, and that's what I did with PTPI. Now, sure, I missed out on this move here all the way to 954, but I'm okay with that because for me, it was just a little too fast and not the type of trade I'm looking to take. It was pretty choppy, right? But we can see halted up, opened on this candle, and then sure enough, hit that target and then started to fade off down back into this 820 level. It held, never closed below, and sure enough offered another scalp and target hit at 920 and the $0.50 950. So these are targets hit. So once we hit these targets, what we're looking for is it to close over the next level of resistance that it's already hit. And it's already hit 950. So technically speaking, we want to see this now close over 950 to really deem this as bullish because that's the $0.50 level. So 920 was the level we have to first see it close over if we're looking for an early entry. And we can see this is a major false breakout here. And trading the confirmation strategy, we avoid these type of moves because again, we're looking for a clean close, and very important, the clean close, which is the candle close at the top of this candle, not that wick, right? And we never got that close over, so we would avoid this trade. And if we were in the trade from 820, of course, we'd be scaling out and taking profit because we know that we're hitting target at 850 mental level, $9 mental level, 920 and 950 the mental $0.50 level as well, right? So we can avoid these major red candles, and this is a negative 9.5% candle. So even worse than the first one we saw before, but we did have this giving giving us a heads up that this is a possibility. And we can see that maybe a false breakout is not the type of trade we're looking for. Maybe we're looking for it to confirm that level, to then put our stop somewhere just below, where we're going to look for target areas just above or wherever we're comfortable in the trade. So this is my analysis on PTPI, going over the confirmation strategy and how you can avoid these major losses. And for anyone who is still in this type of trade and you're buying at these highs, if you're buying around that 950 and you're still in this trade, you have to bear a 30% loss. So that's crazy, right? And we're looking for it to, again, close over these levels. Once it closes below, that's it. We deem this as bearish. And once it fills these gaps, we get a little hesitant taking trades in these gaps because, again, they've already filled. And because they've already filled, they're less attractive as key breakout traders. And that's what I am. I'm a key breakout trader. I look for these key levels to close above, letting me know, hey, we've got support here. Let's hold this level and look for the next area above as a possible target. So guys, that's it on PTPI. I hope that helped. That's confirmation strategy. If you want to learn more, I go over this every day live in voice in our Discord, and I'll see you there. Thanks.